Hello, Maverick traders. This is Imri, and welcome to today's currency recap. It is April 20th, 420, and it definitely seems like the markets are on something because today's action has been pretty intense. So investors are weighing disappointing earnings. Tesla, for example, was down 9% at some point as the company emphasized sales over profitability, and cryptos continued their sell-off as well. Gold was up on the day, however. So jumping right in, taking a look at the S&P 500, you can see we're still struggling against this trend line. I mean, we've attempted multiple times to break through it, and we have failed so far. Now, just because we failed to break through doesn't mean that I see this enormous drop coming, right here, right now. I think it's likely we trade back on the daily chart somewhere in between the 20 and 50 period moving averages. So somewhere in the neighborhood of 4,050 would be a realistic downside target here in the S&P, at least for now. And in the total world stock index, we traded right up into that resistance zone I pointed out last week, and we rejected it. So same kind of deal here, trading between 91 and 91.50. That space occupied by the two moving averages would be a realistic downside target there as well. Now in cryptocurrencies, you can see how we've traded right into that shaded gray support region that I highlighted last week, and we rejected it hard. Again, would not be surprised to see a pullback. This is a weekly chart, but still, I wouldn't be surprised to see a pullback to the, just above those two moving averages. I would say roughly around 25,000 or so on this cryptocurrency basket. So yeah, I do see more downside to come in cryptos. Now, what happens after we complete that downside is really going to be the interesting question. I personally think it could prove to be a buying opportunity, but time will tell. So we're going to go with a +2 in terms of the market outlook for now. We're still above both moving averages, but the slope is turning a little bit neutral. We just need that 50-period moving average to turn up to go back to a +3. However, this picture could change very quickly if we trade back below those moving averages next week. In terms of the news, tomorrow morning, like in overnight during the European session, we're going to have a ton of inflationary data coming out of Europe and Great Britain. So just be very, very cautious with any trades involving the European currencies. If you're hanging on to anything overnight, the potential for volatility is pretty immense. And then later that morning, the US is going to join the data party as flash manufacturing and flash services PMI reports come out at 9:45 a.m. All right, so that's it in terms of high impact news events. Moving straight on now to currency analysis. Taking a look at the cryptocurrency baskets, we're in the red across the board. There just isn't too much to add there. Bitcoin Cash virtually identical on the day, and Litecoin being the biggest loser. Over on the fiat currency side, the Swiss franc outperformed, which surprised me today. And then we also had the yen and the Aussie dollar outperforming on a relative basis. So a little bit of a strange pairing there, and given the general risk-off sentiment in the market today. The New Zealand dollar was by far the biggest loser, followed by the Canadian dollar in second place, in terms of the losers, that is. Now, in terms of velocity, here's what's interesting. We've got clear winners and losers here. So I'd say pairing the New Zealand dollar and the Canadian dollar against pretty much, anything in that +2 column seems like a good idea to me, given you have the right chart pattern set up. And then the currencies in the 0 column right there, well, a lot of them are basing, and we're going to take a look at what they're doing in just a moment as we head over into TradingView to take a look at some possible trades. Okay, so we'll start off with the yen. So we pulled back in that support region that I pointed out last week. I still think there could be a little bit lower to go. This decline still looks incomplete to me. So it is possible we break through the support region, fake everyone out, and then start heading sharply higher. But the risk-reward equation is definitely skewing more to the upside than the downside, in my opinion. If I draw this trend line, you can see we kind of broke through it. So we just need to maintain this positive momentum here in the yen in order to give a bullish reversal higher odds of succeeding. Now, in terms of the US dollar, we busted out of the wedge, broke down sharply once more, broke up sharply, and we're now trading sideways. In my opinion, the dollar is more or less a coin flip right now. I mean, we can continue extending these trend lines a little bit. But yeah, frankly, I think the US dollar is getting to a point where it is getting ready for its next larger, more significant directional move, given the corrective nature of this pattern. And by corrective, I mean, look at all the overlaps here. You know, we have up, down, up, down, up, down, up. That tells me that likely the breakout is going to be higher, not lower. So you compare that to when the market is trending strongly. We have a high here, we have a low. We have a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, and so on. And you can see what happens when the market starts getting choppy, where we have this down, up, down, up, down, up, down, up, down sequence. That's when the trend starts to lose momentum and we see that vicious reversal go the other way. So what's really interesting to me here in the dollar is that we broke the series of pivot points going lower and lower and lower. So we took out this pivot point, made a new high, and if we can hold this low here as a higher low, then I think there's very good reason to expect one more wave, at least one more wave of significant dollar strength. Now with the Swiss franc, surprising to me, I thought we would fail up here and I thought we'd get a bigger reversal. But the best buy signals in the market come from failed sell signals and vice versa. So I'm inclined to give the Swiss franc the benefit of the doubt here. And we have to look quite a bit to our left to assess any possible targets. But the next obvious target is this major spike top from 2015. Now, if you do your research on the Swiss franc, you'll know that that's right around the time when the Swiss franc kind of decoupled in what was known as the Swiss franc tsunami. And in any case, that's a fascinating piece of Forex history that I do suggest reading up on. All right, so next up is the euro. So the euro here broke above resistance, similar to how the Swiss franc did, but the move is not as convincing given the data that we have coming out in the eurozone later tonight, or I guess early tomorrow morning. Now, I think it's best to sit on the sidelines with the euro right now and see what that data does to the currency. Very similar situation with the pound. I think the pattern in the pound is generally more clear. I think we have more upside to go in the pound. But you know, just because in the big picture, I think we have more upside in the pound doesn't mean I just want to blindly buy the pound. We have to have the right chart set up and we don't have that right now. Canadian dollar, however, was very clear. I told you guys, look, I don't like trading within a range. But if you are a range-bound trader, I said this last week, you want to look to short as we get up into the upper boundary of this range. That's exactly what happened. Canadian dollar following the script. Aussie dollar said, look, I'm getting bullish on the Aussie, but I want to see a clean break through this downtrend line. We haven't quite gotten that yet, and we are running into some overhead resistance right here. So just be very cautious buying the Aussie dollar. I think the potential for a pullback certainly exists. And then finally, the New Zealand dollar. Look, I mean, this is one of those where I kind of have to rework the parameters of this falling wedge here. No doubt about it, the New Zealand dollar is weak right now. In terms of Fibonacci retracement areas, you can see we're right below the 61.8%. So if the Swiss franc did want to make a comeback, I'd say now's the time. However, when I look at my momentum indicators, I don't really see any signs of real bullish momentum in the New Zealand dollar. At least not on any of the higher time frames. On the lower time frames, like the 1 hour, we do have some bullish divergence here. So we have a low, we have a high, and then we have a slightly higher high here, even as the market is making new lows. So that does tell me we will get that breakout higher in the New Zealand dollar that I am expecting, but as far as timing goes, I couldn't tell you if that's going to happen tomorrow or next week. So best to keep an eye on the price chart. As far as key levels go, if we take out the Wednesday high, high from yesterday, April 19th, I'd say that's a pretty good signal that we may have bottomed here and it's time to start looking for setups to go long. Doesn't mean you should go long, just means that's where I'd be looking for setups to go long. All right, so in conclusion, equity is just really going nowhere. We're trading broadly sideways for quite a few sessions now. FX looks like low volatility for this week, but yeah, the only surprise I would say is if tomorrow's data is a big miss in either direction. If it's higher or lower than expected, considerably speaking, then yeah, then we could see some volatility return. Cryptos remains to be the place to trade. I just think because we can't play the short side, we just have to be patient right now. But If I'm correct, then once the sell-off concludes, it will lead to a very nice buying opportunity, and we can cover that later. And as always, we want to emphasize proper position sizing and, of course, following your trading plan. All right, thanks, traders. That's it from me. See you next week.